Okay, so we're diving into some fascinating stuff today. Marine insurance law.
That's right. We've got
Quite a bit to unpack.
You've given us excerpts from Cases and Materials on Marine Insurance Law by Susan Hodges and Law of Marine Insurance. I have to say, Pirates and Shipwrecks, those sections were quite a page turner. But the goal here, I think, is to really get a grip on the essentials of this field, something that's relevant. Whether you're a lawyer or just interested in the complexities of the business of the sea.
Well, it's amazing how many of these principles, some dating back centuries, are still very much in play today. It really speaks to how closely the law has evolved with the industry itself.
Right, and that historical depth is what I find so fascinating. But let's get into specifics. Our sources call utmost good faith the bedrock of these marine insurance contracts. I have to admit, at first I thought, well, isn't good faith just assumed in any contract? But here it seems it's not just ethical, it's legally binding. It absolutely is. And the implications are huge. Both sides have to disclose all the important facts, even if they're not specifically asked.
So you're saying even if it's not, is the ship going to sink? Well, I didn't want to tell you.
Even then. And this isn't just at the start. The case, Fraser Shipping Limited versus Colton, that shows this duty, this continues even after the contract's been signed.
So no hiding the treasure map hoping for a bigger payout if things go wrong.
Exactly. Because any attempt to hide something, to mislead the other party, that can actually void the entire insurance contract. We're talking high stakes. Take the Gunford case. This one went all the way to the House of Lords. And the issue, overinsurance. The ship owners had taken out multiple policies on their freight, way more than the actual value.
So they were kind of hoping to profit from a loss.
Exactly. And the court said, nope, this overinsurance, that's a material fact, should have been disclosed. It was a breach of that utmost good faith. Those extra policies, worthless.
That's a tough lesson. But it shows how central this idea of transparency really is to the whole field.
It's about leveling the playing field. Both the insured and the insurer have to be working with all the information, a clear picture of the risks involved.
Okay, transparency. Got it. Now, shifting gears a bit to another concept that our sources really hit on, warranties. And I got to say, the language gets pretty strong here. You've got ironclad, you've got strict compliance. This is serious stuff.
It is. We're not talking about casual promises here. These are conditions that have to be met for that policy to stay valid. Even small deviations can have big consequences.
Yeah, the case of the Juno really jumps out. They had this very specific warranty, 14 6-pounder cannons. It's so specific, like what was the implication there?
The Juno, it had to have, and I quote, 14 6-pounders, swivels, small arms, and 50 hands or upwards, copper sheathed. The case went to court, and the ruling was basically any deviation from that, even if it didn't impact the risk, could void the coverage.
So even if they had like 15 cannons or the copper sheathing wasn't quite right, that's it.
That's how strictly these things have been interpreted, yeah.
Yeah.
Shows the level of detail, the precision that's expected in these contracts.
It's a good reminder to always, always read the fine print. Speaking of which, total loss, obviously, a shipwreck on the ocean floor, not good. But then our sources talk about constructive total loss, which seems, more complicated.
It is. Constructive total loss is a legal term. It's not just about the ship being gone, but whether it's damaged so badly that repair is impossible or just not worth it financially.
So even if it's technically still afloat, it could be considered a total loss legally.
Exactly. The Kaltenbach versus McKenzie case is a good example. The ship ran aground, but the damage wasn't the main issue. It was the cost of the salvage, the repairs, getting it seaworthy again. It all added up to more than the ship was worth, even if they fixed it.
Yeah.
So the court said, that's a constructive total loss.
So it's about the economics, not just the image of a sunken ship. But what happens then? You can't just write a ship off like that, can you?
You can't. And that's where abandonment comes in, which is closely tied to this whole constructive total loss thing. You can't just go, well, that's it, she's gone, and expect the insurance to just cover it.
There's more to it than cutting your losses and sailing away.
Much more. It's a whole legal process, very specific. There's the notice of abandonment, basically a formal statement to the insurer saying you're abandoning the property and claiming a total loss.
And there's a time limit on that, right? Like you can't abandon ship and then years later try to make a claim.
You're getting it. The Aurora and Forgus versus Town Inn, that's a good case study. The Igatsminendi, it was seized, which caused delays. Because of that delay, the court said, nope, they missed their window to give that notice. Timing is key.
Abandonment, not as simple as it sounds. It's like a whole legal dance you got to do,
Yeah.
right? Timing is everything.
It is. Those requirements are there to protect both sides, the insured and the insurer. Fairness, accountability, all that, when you're dealing with these really complex situations.
Okay. I'm starting to see how intricate all this gets. Speaking of intricate, let's move to what sounds like a real head scratcher, figuring out the proximate cause of a loss.
Yeah, this is where it gets interesting. You've got to determine the most direct cause. Was it something covered by the policy? Perils of the sea, like a storm? Or something else entirely?
So you can't just say, hey, my ship sank, pay up. You've got to prove why it sank.
Precisely. You've got to figure out what essentially delivered the knockout blow.
Yeah.
And sometimes there are multiple factors, and that's where it gets tricky. The idea of inherent vice, for example.
Inherent vice. That one, I admit, that one threw me for a loop when I was reading through this.
It sounds more complicated than it is. Basically, losses that happen because of the property itself,
Right.
like a hidden flaw, a weakness. Think about a ship carrying fruit, perishables. If that spoils, that's inherent vice.
So you're hauling bananas, they ripen too fast, not the insurer's problem.
Right. Or a ship built with subpar materials. If those start to fall apart, causing damage, again, inherent vice.
Okay, but what if there is a storm and this ship, which maybe was built with some questionable materials, gets damaged? How do you prove what's really to blame?
That's where legal precedent and often a lot of debate come in. Es mai har. That's a classic case. A ship sank, but the insurer argued, hold on, this wasn't just rough seas. They pointed to the ship's age, the wear and tear, basically arguing that it was already on its last legs.
So it's a question of, was the storm the real cause or was it doomed anyway?
Exactly. Did those pre-existing conditions contribute to the loss? That's what the court had to figure out.
And what did they decide?
They sided with the insured. The insurer couldn't prove the ship's condition was the main cause, so they were still on the hook.
Interesting. So it's all about who has to prove what and how strong that proof needs to be, which makes me think, what happens when there's a suspicion that someone wanted the ship to go down?
Now we're getting into willful misconduct. And you're right, when you're talking about deliberate acts, that burden of proof gets even higher.
Because now you're not just talking about an accident, you're saying someone did this on purpose.
Exactly. Maritime law starts to bump up against criminal law here. And one of the classic examples you'll see throughout these materials is barratry. Sounds like something out of a pirate movie, right?
It does. But if I'm remembering correctly, it's not just about mutiny on the high seas, though I'm sure that would qualify.
It can be mutiny, but it's broader. Think of it as any act by the captain or the crew that's intentionally harmful to the owner, to the charterer. Betrayal of trust, that's the core of it.
So we're talking a captain selling off cargo for his own profit or intentionally running the ship aground, that sort of thing.
That's the idea. But proving it, that's hard. You need hard evidence, not just suspicion. You have to show a deliberate act and that the intention was to cause harm.
So just thinking something's fishy isn't enough. You need to back it up.
Exactly. A good example is the case of the St. George. The insurers suspected the owners were trying to sink their own vessel. To prove it, they requested all sorts of documents, logs, financial records, everything, and they even asked for legal proceedings to be put on hold until they had what they needed, a full-blown investigation.
Wow. It becomes its own separate quest for the truth then.
It often does. And this idea of evidence, intent, that high standard of proof, it's woven throughout marine insurance law.
It's really fascinating to see how these centuries-old legal concepts are still being used in situations that honestly often feel ripped from the headlines.
It really highlights how relevant this area of law remains, even today.
Absolutely. And speaking of relevant, I think our next topic takes us into the realm of shared responsibility and cooperation on the high seas. General average.
General average. That's a concept that really embodies that spirit of maritime tradition, the collective good, all of that.
Okay, so break it down for me. What does sharing the burden on the high seas actually look like?
Picture this. A ship caught in a massive storm. We're talking, in danger of sinking. To save the ship, to save the cargo that's left, the captain makes a tough call, jettisons some of the cargo, a necessary sacrifice, but a costly one.
So someone has to lose something to save everyone else.
Exactly. And that's where general average kicks in. It says everyone involved in that voyage, the ship owner, the cargo owners, everyone, shares the cost of that sacrifice proportionally.
So it's like a collective safety net.
Yeah.
Everyone chips in to cover those losses for the greater good.
Exactly. And this principle, it's deeply rooted in maritime law. Hingston versus Wendt is a great example. A ship ran aground. To save the cargo, they had to spend a lot, unload it, move it to safety. The court ruled that those expenses, that's general average, because it benefited all parties involved.
It's interesting how often these legal concepts come down to, just basic fairness.
It is. When you set out on a voyage together, you share the risks and the rewards. And that shared responsibility goes beyond just cargo overboard during a storm.
Ooh. There are other situations where this might apply.
Absolutely. Think about a ship making an unplanned stop for emergency repairs. Or, those extraordinary expenses to put out a fire on board.
So spreading the cost of those unexpected events that benefit everyone.
Precisely. And that brings us to another principle that's all about being proactive. Sue and labor.
Okay, from the name alone, this one doesn't sound like it involves just sitting back and letting the insurance company handle everything.
You got it. It's about taking charge when things go wrong. The insured party, they have to do everything they reasonably can to minimize a loss, even if it goes beyond what their policy specifically says.
So it's about taking action, mitigating damage, not just assuming insurance will foot the whole bill.
Precisely. It encourages swift action, protecting your interests, not just waiting for a payout.
Which makes me think of the Kidston and others versus Empire Marine Insurance case. They had a free from particular average warranty, so the insurer was only liable for a total loss of the ship. But when the Sebastopol was damaged, the master, he chartered another vessel to transport the cargo, saving it from being completely lost. So the question became, were the costs of chartering that second ship recoverable?
And what did the court say?
They actually sided with the ship owner. They said those expenses, they were recoverable under sue and labor because the master acted responsibly to minimize the loss.
Exactly. It's about taking those extra steps, even if they're not explicitly spelled out in the policy. It's about doing what's necessary to prevent a bad situation from getting worse.
It's amazing how these centuries-old principles, developed when handwritten contracts were the norm, are still relevant.
They are, and it speaks to how well they captured these fundamental challenges. Risk management, shared responsibility, those are timeless, right?
That's a great point. It's just that marine insurance, it provides such a dramatic setting for exploring these ideas.
It certainly does.
It strikes me that even though we're talking about, ships and the open ocean, a lot of these principles, they feel relevant to just business in general.
Oh, absolutely.
Yeah.
Many of these concepts, we're talking about centuries of maritime trade, but the lessons here, they apply to anyone who's, dealing with agreements, with risk, all of that.
It's like the ocean was this giant testing ground for ideas about contracts and responsibility.
Precisely. Take utmost good faith, right? It's not just a maritime thing. That's the foundation of any partnership that works. Transparency, honesty, that's not just, good ethics. It's essential. You need that to build trust, to make sure everyone's on the same page.
It's like laying the groundwork, whether you're signing a shipping contract or any kind of business deal. You need that trust.
Exactly. And then there's warranties. We talked about how strict they are in this context, but that idea of being crystal clear in the language of a contract, that's universal.
Right, like every word matters.
Every word has weight. Understanding what you're agreeing to, that's crucial.
Yeah, it's a good reminder to never just gloss over that fine print. Don't assume anything, no matter what kind of deal you're making.
Because those assumptions, they can come back to bite you.
Exactly.
And remember our discussion about proximate cause, unraveling that chain of events, trying to pinpoint what really led to a problem.
Right, like what was the root cause?
Exactly. That kind of analytical thinking, that's valuable everywhere.
It's like being a detective, but instead of solving a crime, you're solving for why something went wrong.
Exactly. So yeah, even if you're not, sailing the seven seas, these ideas of risk management, of understanding your contracts, of taking action to prevent things from getting worse, it all applies.
It's just that marine insurance gives us this very dramatic, real-world way to look at them.
It certainly does. Now, should we dive back into some specific cases? We touched on constructive total loss and abandonment, but there's more to unpack there.
Yeah, right, because it's not always as simple as, a ship snapped in half on the ocean floor.
Precisely. Take the case of the North Britain, ran aground in the Thames. The question wasn't just the damage itself, but could they even raise it and repair it for less than it was worth?
So a classic constructive total loss scenario then.
Exactly. But, and here's where it gets interesting, they had to factor in these expenses that were payable by other parties.
Wait, so if the if the ship owner is responsible for the damage, shouldn't they be on the hook for the whole thing?
Not necessarily.
Yeah.
In this case, the harbor authorities, they had the power to remove wrecks,
Yeah.
right? Navigational hazards and all that. Those costs, those were separate. They had to be deducted when figuring out the total repair bill.
So it's like itemizing the damage and seeing who's responsible for which part.
Exactly. In this case, it also shows how important it is to think about future costs, salvage operations, things like that. When you're deciding if a ship is a constructive total loss, you've got to look at the big picture.
Right. Weigh those costs against like what you could actually get for the salvage ship.
It's a complex calculation,
Yeah.
and it gets even more intricate when you add in abandonment. Because remember, it's not just about walking away. There's a formal process, very specific requirements.
Right, and timing is key on those. But our research, it mentions some situations where that notice of abandonment might not even be necessary.
Right. There are exceptions. Like if it really wouldn't benefit the insurer at all, if the property is, I don't know, vaporized,
Yeah.
then requiring a notice it's pointless.
So if your ship is literally blown to smithereens, no need to send a strongly worded letter.
Precisely. The courts have called it an idle ceremony in those situations. Sometimes practicality trumps, the strict letter of the law.
It's a good reminder that these principles, while important, they're not always set in stone. There's some flexibility there, right? You have to adapt to the situation.
Absolutely. And that's what makes this area of law so interesting. It's constantly evolving. But speaking of evolving, shall we set sail for a topic that's always captured the imagination?
Pirates, you say. I was wondering when those would make an appearance.
Well, they're not as common as they used to be, of course.
Right?
But piracy, it's still a real threat in some parts of the world. And in marine insurance, it falls under, you guessed it, perils of the sea.
So if your ship is boarded by swashbuckling rogues, you can file a claim.
In theory, yes. But proving piracy, well, that requires a bit more than just, a Jolly Roger on the horizon. You have to demonstrate that those attackers, they had no legal authority and their intent was to steal, to plunder.
So a bunch of tourists who had a few too many rum and cokes and are wearing like Halloween costumes, that wouldn't count.
Not unless they were legitimately trying to take over the ship. It comes down to criminal intent, a lack of legal authority, all of that.
Our research did mention a case where barratry and piracy get a little intertwined.
Ah, you must be thinking of Nutt versus Bordeaux. Classic case.
That's the one. What happened there?
Okay, so the ship's master, whose policy covered barratry, he goes rogue, deviates from his route, sails into a Spanish port, and then fraudulently sells off the cargo.
Sounds like a textbook case of barratry, right? Violating that trust.
Exactly. But here's the twist. While they're in port, the ship gets seized by the Spanish authorities. So the question became, was that seizure the proximate cause of the loss, or was it that act of barratry that set that whole chain of events in motion?
So did they see the seizure as a separate thing or a direct result of what the master did?
That was the whole debate. In the end, the court said, nope, it's the barratry. That deliberate act of sailing into a Spanish port, knowing the risks, that was the deciding factor.
That case really shows how these lines can blur, perils of the sea, barratry, even international incidents. It's complicated.
It is. And it underscores how carefully you have to look at these situations. But pirates and rogue captains aside, there are other, shall we say, less dramatic disruptions that can happen.
You're talking about like strikes. I can imagine those would cause all sorts of logistical nightmares.
Absolutely. Strikes can lead to delays, damage to cargo, all kinds of financial headaches. And they're often dealt with under separate clauses in marine insurance policies.
So there are like specific provisions just for if a strike happens.
Yeah, they often sort of mirror the exclusions you'd find in a standard marine risk policy. It's a way to offer that targeted coverage.
So if a strike at a port means a ship can't load or unload, those losses might be covered under that separate strike clause.
That's the general idea, yeah. But even something like the definition of a strike, that can be open to interpretation. Our research mentioned a case where civil commotion became a sticking point.
Civil commotion? That sounds intense. Are we talking like full-on riots here?
The case, Spinney's 1948, Limited versus Royal Insurance Company Limited. It involved property damage in Beirut during a period of, political unrest. And the question was, did that unrest, did it qualify as civil commotion? as the policy defined it.
So not a traditional labor strike, but still instability that caused disruption.
Exactly. And the court, they had to look at the context, the specific wording of that policy, even legal precedent, to make a ruling.
It seems like with these policies, every word is up for debate.
Often it is. That's why it's so crucial to really understand the nuances, how those terms are used in the real world. Now, speaking of terms, shall I move on to a clause with a rather ominous name?
Oh, do tell. What is the frustration clause all about?
Well, it's a clause that essentially protects the insurer from claims when a voyage is, let's say, disrupted or can't be completed due to circumstances beyond anyone's control.
So if a ship is, I don't know, delayed, blocked from reaching its destination because a war breaks out, something like that, the insurer might invoke this clause.
That's the general idea, yeah. But here's the catch. That disruption, it has to be a direct result of a covered peril. So you mentioned war, but also strikes, government intervention, that sort of thing.
Like in British and Foreign Marine Insurance Company Limited versus Samuel Sanday and Company, where shipments were delayed because World War I broke out.
Precisely. The ship owners, they claimed for the loss of the voyage, said the war made it impossible. But the court found that while the war did disrupt things, the frustration clause, it didn't apply to claims for damage to the cargo itself.
So if the war had damaged the goods, that would be a separate issue.
Exactly. The frustration clause, it usually just covers those losses directly tied to the voyage being cut short, not damage to the stuff itself.
It's like each of these clauses, it's like a piece of a bigger puzzle.
That's a great analogy. You have to see how they all fit together. But for now, let's shift back to constructive total loss for a moment. There's a case, Helmville Limited versus Yorkshire Insurance Company Limited, that really digs into how you calculate those repair costs.
Okay, and what makes this case stand out?
It highlights the subtle difference between the insured value and the repaired value of a ship.
I'm listening. What's the difference?
Okay, so the insured value, that's simple. It's how much the ship is insured for.
Yeah.
The repaired value, though, that's the estimated market value after all the repairs are done.
So it's the difference between what the policy covers and what the ship is actually worth once it's all fixed up.
Precisely. And in this case, the court said that constructive total loss clause, it only applies to the cost of the repairs, not to that final repaired value.
So even if fixing the ship cost more than the insured amount, the owner couldn't claim constructive total loss if the ship was ultimately worth more after it was fixed.
Exactly. It just highlights how important it is to understand the wording of those clauses and how they all work together. It's not always simple.
There's always another layer, isn't there?
Often is. And that complexity, that's why having expert guidance is so important. It's about navigating those nuances, making sure you understand your rights. Speaking of nuances, should we circle back to the notice of abandonment for a bit?
Yeah, let's dive back into that. I feel like there's more to uncover there.
You're right. Remember, it's that formal process where the insured party basically says, okay, this damaged property, it's yours now, and then asks for that total loss payment.
Right, like handing over the keys, so to speak.
Essentially, yes. But there are rules, right? Timing is critical. The Polarian Steamship Company Limited versus Young case, that really highlighted that.
What happened in that one?
Ship ran aground, badly damaged. Owners gave their notice of abandonment, but the insurers, they said, hold on too soon. That's premature.
So they were too quick to declare a constructive total loss.
Exactly. The court had to figure out, at the time they gave that notice, was it reasonable to believe the ship was done for?
So it's not just about the damage itself, but whether it's even possible to save and repair the ship.
Precisely. In the end, the court actually sided with the ship owners.
Yeah.
Because based on what they knew at that time, it was reasonable to think the vessel was beyond saving.
It sounds like a tough call to make.
It is. That case really shows that you have to act quickly in these situations, but you need the evidence to back up that decision.
Balance protecting yourself with making sure you're not jumping the gun.
Exactly. And that's another area where, expert advice can be so valuable. Now, moving away from these dramatic shipwrecks for a moment, let's talk about something a bit more mundane, perhaps.
Mundane. In the world of marine insurance, I'm not sure I'd use that word.
Well, consider wear and tear.
Oh, right.
It might not be as exciting as, pirates or storms, but it's a constant factor.
That's true. Ships are constantly exposed to the elements, the machinery. It's working overtime.
Precisely. It's that gradual deterioration, just from normal use. And under most policies, losses from ordinary wear and tear, Those are usually excluded.
So if your ship's engine finally gives out after, I don't know, years of faithful service, that's not on the insurer.
Generally, no.
Hmm.
But of course, there's a but. That line between ordinary wear and tear and damage from a covered peril, well, that can get blurry.
Right, because a storm might be the final straw, but was the ship already in a weakened state because of, years of use?
Exactly. And the Caribbean Sea case, it's a perfect illustration. The ship was damaged, and of course the insurers, they claimed wear and tear, not a covered peril, they said.
So the debate was over what really caused that damage.
Precisely. The court had to look at the ship's age, its maintenance records, everything to figure out if it was just normal wear and tear or something that the policy actually covered.
It seems like proving these things often requires some very specific knowledge.
It often does. This case just highlights how important documentation is. Having expert assessments, really carefully analyzing everything to figure out what happened and then whether that's covered by the policy.
It's a good reminder that even something that seems straightforward, like wear and tear, it can lead to these really complicated legal battles.
It certainly can. And it all comes back to having clear language in your policies, expert guidance, and just a solid understanding of how these principles work in practice. Which brings us to a concept that's, well, it's fundamental to any legal case, really, the burden of proof.
Right, because it's one thing to have a claim, but it's another thing to actually prove it.
Exactly. And in marine insurance, that burden of proof, it typically falls on the person making the claim. So if you're looking to recover losses, you have to show that those losses happened because of something that's covered in your policy.
You can't just say, well, my ship's at the bottom of the ocean, pay it.
Nope. You need evidence. Ship logs, weather reports, expert testimony, anything that supports your claim.
And what about the insurer? What's their role in all of this?
They have the right to challenge your claim, of course, to present their own evidence to disprove it. They might say the cause isn't covered, that you didn't meet the terms of a warranty, that you didn't do enough to prevent the loss, things like that.
So it becomes this back and forth, each side making its case.
Exactly. The standard of proof in these cases is usually on the balance of probabilities, meaning you just have to show that your version of events is more likely to be true.
So not quite as strict as beyond a reasonable doubt, like you'd have in a criminal case.
Exactly. It's about showing what's more probable. And that applies to the initial claim and to any defenses that the insurer raises.
But our research did mention that there are some situations where that burden of proof, it can actually shift.
Right. There are exceptions. For example, let's say a ship sinks in perfectly calm weather. No explanation. In that case, it might be presumed that the ship was simply unseaworthy.
So if there's no obvious external cause for the sinking, the assumption is that there was something wrong with the ship itself.
Precisely. And in that situation, the burden of proof would then shift to the owner. They'd have to prove that the ship was seaworthy.
That's fascinating. So that burden of proof, it's not always fixed. It can depend on the specific situation.
Exactly. And this is just another example of why understanding the legal side of all of this is so important. You really need that expert guidance to make sense of it all. Now, let's shift gears from accidental sinkings to something a bit more, well, unsettling. Deliberate acts of destruction, particularly fire at sea.
Oh, fire at sea. That's the stuff of nightmares, isn't it?
It's a constant threat. And while many fires are accidental, of course, there are cases where they're set on purpose.
Arson at sea. What are the implications for insurance in those situations?
Well, unlike claims for, say, perils of the sea, which require an accidental loss, fire claims they're usually covered regardless of how that fire started.
So even if someone torches their own ship, they can still make a claim?
In most cases, yes. However, the insurer can raise defenses. Willful misconduct on the part of the insured, that's a big one.
So if you set your own ship on fire for the insurance money, chances are that's not going to fly.
Precisely. And that's where that burden of proof comes in again. The insurer would have to prove that you were responsible.
Our research mentioned a case that shows just how tricky it can be to prove that kind of willful misconduct.
You must be thinking of Slattery versus Mance.
That's the one. What happened there?
The insurers were convinced that the owner had set fire to his own ship, but the court said, not enough. You haven't proven it.
So even though the fire might have been deliberate, they couldn't directly link it back to the owner.
Exactly. Suspicion isn't enough. You need solid proof, especially with such a serious accusation.
So it's not enough to just say, well, maybe they did it. You've got to have the evidence to back it up.
Exactly. It's not just about showing it's possible, but about providing really compelling evidence. In these cases, They often hinge on that battle of evidence, of expert testimony.
It sounds intense.
It can be. That's where experienced lawyers come in, investigators, people who can really dig into these cases.
So it becomes a battle of expertise, really.
In many ways, yes. But moving on from arson, let's talk about a specific type of barratry that actually is related to fire. Barratry by fire.
Barratry by fire. That sounds, well, even more specific. What exactly is that?
It's when a fire is set on purpose by the ship's master or the crew, specifically to harm the owner's interests.
So it's arson and a betrayal of trust. A double whammy.
Exactly.
Yeah.
And it's treated as its own category of barratry because of that specific act of using fire to cause damage.
Our research highlighted a case that really showed how difficult it can be to prove.
Captain Pinago's DP, a classic.
That's the one. What were the circumstances there?
The insurers alleged that the crew had deliberately set the fire and that the owners were in on it.
So they were accusing the owners of being complicit in the whole scheme.
Precisely. But the court said, nope, you haven't met that burden of proof. They couldn't definitively link the owners to what the crew did. So no dice.
Even though the fire was probably deliberate, the owners were off the hook because no one could prove they were directly involved.
Exactly. And it highlights a crucial point. Even though barratry by fire is covered by marine insurance, the owner's innocence, that has to be established for them to actually get a payout.
So there's this extra layer of scrutiny when it comes to proving who is really responsible.
Precisely. All those legal principles we've talked about, causation, burden of proof, evidence, it all comes into play. But moving on from fire and I guess negligence in a way, let's talk about a clause that's become really important in modern marine insurance. The inch-marie clause.
The inch-marie clause. Okay, what makes this one so special?
It covers losses caused by a whole bunch of things that traditional policies often didn't. So think negligence of the crew, boiler explosions, hidden flaws in the hull, things like that.
So it's like an expanded safety net, catching those things that might slip through the cracks of standard coverage.
That's a great way to put it. It's designed to offer more protection against those less predictable, less preventable losses.
Our research mentioned a case that really got into the weeds on this, distinguishing between negligence and incompetence when it comes to this clause.
You're talking about Lamar Towing Company versus Fireman's Fund Insurance Company.
That's the one. The tugboat, the Trudy B, sank, and the owners, they made a claim under the inch-marie clause, and they blamed the crew, said it was negligence.
So they were saying it was human error that caused the sinking.
Essentially, yeah. But the insurers, they said, no, this wasn't just negligence, this was incompetence. That the crew, essentially, they didn't know what they were doing, and they made the boat unseaworthy.
So not just a mistake, but a lack of skill, of ability.
Exactly. And that distinction, that's key. The inch-marie clause, it covers negligence, not being careful enough, but not incompetence. If the crew wasn't qualified in the first place, that's different.
Exactly. You have to figure out, were the crew's actions just negligent, or was there a deeper issue there?
So if you've got a qualified crew, they make a mistake, you might be covered. But if they were in over their heads from the start, that's another story.
Precisely. It just highlights that even with that expanded coverage, there are still limits.
Right. Nuances that can make or break your case.
Absolutely. And again, it reinforces that need for expert guidance. Now, the inch-marie clause, it has another interesting aspect. It also applies to losses caused by the master's negligence.
That's interesting because isn't the master, the captain, ultimately responsible for the ship?
You would think so, right? And traditionally, the master's negligence, that was a barrier to recovery. The logic was that the master, they represent the owner, so their mistakes were the owner's mistakes.
So the master's actions were seen as an extension of the owner themselves.
Exactly. But the inch-marie clause, it changed that. It specifically says that losses from the master's negligence are covered, even if that master is also a part owner of the vessel.
So it recognizes that even the most experienced captain, they can make mistakes. And those mistakes shouldn't automatically prevent the owner from recovering their losses.
Exactly. A prime example is the National Benefit Assurance Company Limited versus Brown case. The master, who was also a part owner, he made a mistake, a navigational error, and the ship ran aground.
Classic case of negligence at the helm.
Indeed. But the court said, nope, the owners, they can still recover under the inch-marie clause, even with that part ownership.
That's fascinating. It really does broaden the scope of the protection.
It does. It's about giving ship owners that safety net, even when it's human error at the highest level that leads to those unexpected losses. Speaking of protection, maybe we should talk about the different types of marine insurance policies that are out there.
Right, because I imagine it's not like one size fits all.
Not at all. The type of policy you need, it depends. The nature of the business, the cargo, the route, all sorts of factors.
Our research mentioned voyage policies and time policies being the most common.
That's right. A voyage policy, that covers the property for one specific trip, point A to point B.
So like insuring your car for a road trip?
In a sense, yeah. It covers that specific journey, however long it takes.
And what about time policies?
A time policy covers the property for a set period, regardless of where it goes during that time.
So more like insuring your car for a year, regardless of how much you drive.
Precisely. More flexible.
Our research also touched on floating policies. What are those all about?
Those are used when the voyage details or the cargo, it's not set in stone yet. They give you a more general cover that you specify later.
So it's like a blank slate that you fill in later on.
That's a great way to put it. It's really useful for businesses that have, frequent shipments, or maybe their cargo needs change a lot.
It seems like choosing the right type of policy. That's pretty crucial.
Absolutely. And that's another area where, working with experienced brokers, lawyers, all of that, that's key. But beyond just the type of policy, there's another detail that's often overlooked, the jurisdiction clause.
Okay, jurisdiction clause. I'm not familiar with that one. What's that all about?
That clause, it determines which court will handle any disputes that come up related to that policy.
Oh, so it decides where the legal battle takes place if things go south.
Precisely. And this is crucial because different places have different laws, different procedures for these types of cases.
Our research did mention that English courts are particularly well regarded for this.
They are. English law is really considered a leading authority in marine insurance, and London is a major hub for maritime arbitration.
So it's common for these policies to specify English jurisdiction even if the parties involved are from other countries.
Very common. It just provides more certainty, more predictability for everyone.
Really highlights how global this industry is.
It does. And that's, again, another reason why having expert guidance is so important. You need to understand what you're agreeing to, no matter where you're operating. Speaking of global operations, let's talk about a service that's always been associated with, well, a certain amount of drama. Salvage.
Right. Rescuing ships and cargo from peril on the high seas.
Exactly. It's a complex process,
Yeah.
often very dangerous, and requires specialized equipment, skilled crews, the whole 9 yards.
It's like the maritime version of a rescue mission.
That's a great way to put it. And the law, it recognizes the importance of this. There's actually a reward offered to those who undertake these salvage operations.
So it's not just about doing the right thing. There's a financial incentive built in.
Exactly. Salvers, they're entitled to a reward based on the value of what they save, how dangerous the operation was, the effort involved, all of that.
Our research mentioned a specific agreement that's often used in these situations.
You're thinking of the Lloyd's Open Form, or LOF.
That's the one.
Well-
What's so special about it?
It's the standard salvage agreement used globally, and it's a no-cure, no-pay deal, meaning the salvers only get paid if they actually succeed in rescuing the property.
So it's high risk, high reward for them.
It can be, but the LOF, it lays everything out very clearly. Everyone's rights, everyone's obligations.
So it helps minimize, arguments, disagreements, because everything's spelled out.
Precisely. Our research also mentioned a case that really highlighted the importance of cooperation in these situations between the salvers and the ship owners.
Oh, which case is that?
The Tojo Maru.
Right. What happened there?
Salvers were trying to rescue this Japanese fishing vessel, but the owner was, well, reluctant to cooperate. They were hoping to get a lower salvage fee if they waited it out.
So a bit of a standoff.
You could say that. The court, in the end, they sided with the salvers. They said the owner's lack of cooperation was unjustified, and the salvers deserved to be paid for their efforts.
It just shows that salvage, it requires everyone to work together, to recognize that the salvers are playing this essential role in minimizing the losses. It's really amazing when you think about it. These principles, developed centuries ago, a time of wooden ships, hand-drawn maps, and they still matter today in this world of, global shipping, massive vessels.
They do. And I think it's because at their core, they're about these fundamental truths.
Right.
Risk, responsibility, how to balance different interests in an agreement. That stuff's timeless.
You've definitely given me a whole new perspective on marine insurance law, and honestly, I feel like we've only just dipped our toes in the water here.
We have. But even just skimming the surface, you can see how much there is to uncover,
Yeah.
how these principles play out in really tangible ways.
Absolutely. And speaking of real world application, before we wrap things up, I'm curious, how could someone listening, even if they're not, negotiating contracts for cargo ships, how could they apply these principles in their own lives?
That's a great question. And it gets at why this area of law is so interesting. It's not just about, ships in the sea. It's about the essence of agreements, how we deal with risk, no matter what we're doing. Take utmost good faith, right? It might have come from marine insurance, but it applies to any relationship where trust and honesty are paramount.
Being upfront, being honest about those important details, no hiding the treasure map, so to speak.
Exactly. Business partnership, negotiating a contract, even just building a relationship with a client. You need that foundation of honesty. And think about warranties. We talked about how important the specific language is in those contracts. Well, that's true for any contract, any agreement you make.
Don't just skim over that fine print, right? Make sure you
Uh,
understand what you're agreeing to.
exactly. Every word has weight. And that analytical approach, tracing back that chain of events to find the proximate cause of a problem, that's a skill that translates everywhere.
Right, like whether it's a technical problem or a project that went off the rails, figuring out that root cause.
It's like David said earlier, being a detective, but for your own life. And even sue and labor, which is specifically about those losses in marine insurance, it speaks to a broader idea of taking responsibility. Sometimes the best way to protect yourself is to take charge, be proactive, fix the problem, not just wait for someone else to do it.
So really, there are lessons to be learned here, even if you never step foot on a ship.
Absolutely. At its core, this is about understanding and managing risk, and that's something we all deal with.
That's a perfect note to end on. This has been a fascinating deep dive. And for you, our listener, I hope this has given you some things to think about, not just about marine insurance, but about contracts in general, how to manage risk, and why it's so important to really understand any agreement before you sign on the dotted line.
Well said. And until our next deep dive, may your own ventures be smooth sailing.